Hi, and welcome to Peak Performance with Dr. Doug. I'm here today with Todd Gordon. Todd is the Senior Technical Strategist and Trader at Forex.com. We're going to dig into the mentality of a trader and talk to Todd today. Thanks very much for joining us.
Thanks, Doug. Nice to be here.
I've known you a while, Todd, and in some of our dialogues beforehand, you mentioned the concept of patience, and you actually said to me that it's taken you about 10 years of trading, 10 years to actually learn how to sit on your hands.
Sure. Well, it's an important part of trading. You know, when somebody sits down to place their first couple of trades, whether they're entering the profession or they're taking it on the retail level, you sit down, you open a trading account, and you feel like your job is to start trading. It's a natural inclination. You know, when people take the mentality that it takes to succeed in society, they bring it to their trading profession and they feel like their job is to work all day long. And it's actually, in the world of trading, that's counterproductive to what you need to do. The first thing you should learn to do is to be able to watch a market, leave your trading platform alone, close it, minimize it, get it out in front of your face. So when you start to see opportunities that match up with your trading style, then you are more inclined to enter the market. If you leave it up in front and you're just banging away all day, you're not learning to be selective in the trade process.
Well, tell me this. So people that are out there that are looking to get either involved in trading or have been doing it for a little bit of time but not much success, and they say, you know, patience really is a problem. Sure. And if I don't get trades on in the market, I can't make any money. What kind of advice do you give those types of people? It's
important to look at a market and realize that you are not meant to trade all markets. You need to have the patience, 2, the discipline, and 3, the experience to look at a market and say, is this market good enough for my money? And that's only going to come from experience. So if you're a new trader, I wouldn't get too discouraged if you aren't able to identify your favorable markets, but in time you need to realize that there are certain situations where you should be in the market, and most situations you probably should be out of the market.
Okay, let's get more specific now and talk about game plans. What products do you trade?
I trade mainly the spot foreign exchange market. Okay, I look at all major markets because the environment that we're in right now, you need to know we're all major. The S&Ps, I need to know interest rates, commodities, but I primarily trade FX.
Now, you made the comment also about you got to plan your trade and then trade the plan. Now, that's a nice expression. It's very catchy. What does it really mean?
What it means is by nature, I'm a technical trader. Okay, and even more specifically, I favor Elliott wave analysis. And what Elliott wave has done for me is actually produced what I call discipline pattern recognition. So again, going back to our prior point, I know at what times in the market I should be in, what times I should be out. So I've taken it a step further with pattern recognition. I should be able to see the trade at least 3 hours before I put the trade on in the fund.
Okay.
And it's a rule that I have. If I haven't committed my trade to paper, I'm not allowed to trade any more than 50% of my allowed size on the fund on a particular idea. So trade your plan your trade, trade your plan means literally see the trade in the future, recognize this is a value area, I want to be involved in the market. Then once you've had proper time to digest the trade, let the trade come to you, then you can execute without hesitation.
How about some actionable advice for this weekend for people that are looking to set up a game plan going into next week? What are you seeing in the markets right now?
Well, the world got pretty bulled up on dollars. And then all of a sudden, China was off about 20% from the highs, crossed into bear market territory. The world was buying dollars for the risk aversion trade. Then we came in, oil inventories number on Wednesday just blew the dollar right out of the water. People might be second-guessing that game plan, but I'm saying probably another 2 to 3% down in the dollar, around 77, 77.5 in the dollar index. I'm going to be looking for that value area to start buying dollars again.
Okay. Now let me put you on the spot a little bit. You've been doing this for over 10 years, do a lot of training. I know you write a newsletter for Forex.com. If like a lesson learned, a best tidbit of advice, maybe 1 or 2 things that you've learned over the years that, you know what, if I only knew this 10 years ago, it would have put me in a different place right now.
Unfortunately, I probably hit my 2 biggest points in the beginning of the conversation. Is 1, identify your value areas based on your style of looking at the markets, and 2, have the patience to let the market come to you. Don't chase a market. There's an opportunity right around the corner if you miss this one. Let the market come to you. Be selective on your entries.
Todd, thanks for joining us today. Thank you all for watching this episode of Peak Performance with Dr. Doug. If you want to learn more about what it takes to be great, come visit my website at drdoug.com.